The economy of Bhutan, one of the world's smallest and least developed countries, is based on agriculture and forestry, which provide the main livelihood for more than 60% of the population. Bhutan's economy is closely aligned with India's through strong trade and monetary links and dependence on India's financial assistance. Bhutan has made tremendous progress in reducing extreme poverty and promoting gender equality, with continuing efforts to address social inequality issues and regional disparities. Over the last decade, the government has been able to reduce the number of extremely poor by 2/3. From 2007 through 2017, the poverty rate dropped from 36% to 12%. Annual real GDP growth has averaged 7.5% since the 1980s, fueled by a rapid expansion of the public sector-led hydropower production. The growth rebound in the short to medium term was constrained by continued COVID-19-related restrictions as well as lower hydro outputs due to maintenance works and further delays in the Puna 2 hydro project. The economy is expected to gradually recover in 2021 or 2022, with output returning to pre-pandemic levels in real terms. Construction activity is expected to normalize, tourism is likely to recover gradually, and services sector growth is expected to pick up in 2022 or 2023. Nowadays, the mixed economy of the Maldives is based on the principal activities of tourism, fishing, and shipping. Tourism is the largest industry in the Maldives, accounting for 28% of GDP and more than 60% of the Maldives' foreign exchange receipt. It powered the current GDP per capita to expand 265% in the 1980s and a further 115% in the 1990s. The country has been a development success, enjoying robust growth coupled with considerable development of the country's infrastructure and connectivity. It has also provided high-quality and affordable public services for its people, resulting in impressive health and education indicators with a literacy rate approaching 100% and a life expectancy of over 78 years. High-end tourism has been the key driver of growth and poverty reduction. The momentum in tourism has continued despite the COVID-19 pandemic. Arrivals are expected to pick up steadily as global travel normalizes, driving real GDP to recover to 2019 levels by 2023. The poverty rate is expected to decline to 9.1% in 2021 and subsequently to 4.3% by 2023. The COVID-19 shock has shed renewed light on the importance of strengthening the Maldives' resilience to external shocks. Although there are plans to develop agriculture and fishing to diversify the economy, the scarcity of arable land is a binding constraint. Focusing on higher value-added financial and business services could create good jobs, but the growth of these sectors is currently constrained by a shortage of local skills. The economy of Afghanistan has steadily improved in the last decade due to the return of a large number of wealthy expats, the modernization of the nation's agriculture sector, and the establishment of more trade routes with neighboring and regional countries. The billions of dollars in international assistance that came from expats and outside investors saw this increase when there was more political reliability after NATO became involved in Afghanistan's reconstruction. Despite holding over $1 trillion in proven untapped mineral deposits, Afghanistan remains one of the least developed countries in the world. Its unemployment rate is over 23% and about half of its population lives below the poverty line. Recent political developments have pushed Afghanistan into an economic crisis. Rapid reduction in international grant support, loss of access to offshore assets, and disruption to financial linkages are expected to lead to a major contraction of the economy, increasing poverty, and macroeconomic instability. In addition, Afghanistan experienced a third COVID-19 wave starting in April. Infection rates have reached record highs, with less than 5% of the population fully vaccinated. A substantial share of the population is expected to move below the poverty line, reflecting negative impacts through employment and price channels. 10 million Afghans are vulnerable to falling into poverty, living with incomes between 1 and 1.5 times the poverty line. The economy of Nepal is largely dependent on agriculture and remittances. An isolated, agrarian society until the mid-20th century, Nepal entered the modern era in 1951 without schools, hospitals, roads, telecommunications, electric power, industry, or civil service. The country has, however, made progress toward sustainable economic growth since the 1950s. The country was open to economic liberalization, leading to economic growth and improvement in living standards when compared to the past. Nepal has used a series of 5-year plans in an attempt to make progress in economic development. While Nepal has achieved respectable growth in the past, averaging 4.9% over 2009 to 2019, the country faces significant vulnerabilities to achieve inclusive and sustainable growth going forward. The ongoing disruptions by the pandemic are compounded by structural constraints such as slow domestic job creation, high vulnerability to natural disasters including climate change and environmental degradation, and large infrastructure gaps. Furthermore, the pandemic has recently triggered a surge in debt levels that needs to be addressed. The biggest challenges faced by the country in achieving higher economic development are the frequent changes in political leadership, as well as corruption. The free market economy of Sri Lanka had experienced annual growth of 6.4% from 2003 to 2012, well above its regional peers. Sri Lanka has met the Millennium Development Goal target of having extreme poverty and is on track to meet most of the other MDGs, outperforming other South Asian countries. Sri Lanka's poverty headcount index was 4.1% in 2016. Since the end of the 3-decade-long Sri Lankan Civil War, Sri Lanka has begun focusing on long-term strategic and structural development challenges. It strives to transition to an upper-middle-income country. With the onset of the COVID-19 pandemic, lingering concerns over Sri Lanka's slowing growth, money printing, and government debt has spilled over into a series of sovereign rating downgrades. Import controls and import substitution have intensified after heightened monetary instability coming from debt monetization. Growth is expected to recover to 3.3% this year, but the medium-term outlook is clouded by pre-existing macroeconomic weaknesses and the economic scarring from the COVID-19 pandemic. With jobs and earnings lost, poverty is projected to remain above pre-pandemic levels in 2021. Official reserves remain low relative to short-term liabilities amid constrained market access. A severe foreign exchange shortage is exerting pressure on the exchange rate. Urgent policy measures are needed to address risks to debt sustainability and external stability. Pakistan is a developing country, with a semi-industrial economy. Primary export commodities include textiles, leather goods, sports goods, chemicals, and carpets. The economy has suffered in the past from internal political disputes, a fast-growing population, and low levels of foreign investment. Pakistan is currently undergoing a process of economic liberalization, including privatization of all government corporations, aimed to attract foreign investment and decrease budget deficits. As of May 2021, the Pakistani government has predicted that future growth rates will be 5%, one of the highest in South Asia. According to the World Bank, poverty in Pakistan fell from 64.3% in 2002 to 2.3% in 2018 but rose to 5.4% in 2020. With the pandemic, the government has been focused on managing the repeated COVID-19 infection waves, implementing a mass vaccination campaign, expanding its cash transfer program, and providing accommodative monetary conditions to sustain economic growth. Bolstered by the recovery in the industry and services sectors and resultant off-farm employment opportunities, poverty incidence, measured at the International Poverty Line. However, this change is not statistically significant, and downside risks arising from lockdown-induced disruptions to employment and high food inflation remain. The economy of Bangladesh is characterized as a developing market economy. It is classified among the next 11 emerging market middle-income economies and a frontier market. In the first quarter of 2019, Bangladesh was the world's 7th fastest-growing economy with a rate of 8.3% real GDP annual growth. In the decade following 2004, Bangladesh averaged a GDP growth of 4.5%. This growth had been largely driven by its exports of ready-made garments, remittances, and the domestic agricultural sector. Bangladesh has an impressive track record of growth and poverty reduction. Bangladesh tells the world a remarkable story of poverty reduction and development. From being one of the poorest nations at birth in 1971 with per capita GDP 10th lowest in the world, Bangladesh reached a lower middle income status in 2015. Bangladesh, like other countries, faces the daunting challenge of fully recovering from the COVID-19 pandemic, which has constrained economic activities and reversed some of the gains achieved in the last decade. The pace of poverty reduction slowed down, exports declined, inequality increased across several dimensions, and the poverty rate in 2020 increased to 18.1% from 14.4%. To recover fully and achieve its growth ambitions of achieving upper middle income status, Bangladesh needs to address the challenge of containing COVID-19. Bangladesh also needs to address the challenge of creating jobs or employment opportunities through a competitive business environment, increased human capital and skilled labor force, efficient infrastructure, and a policy environment that attracts private investments. Addressing infrastructure gaps would accelerate growth and reduce spatial disparities and opportunities across regions and within cities. The economy of India is characterized as a middle-income developing market economy. According to the IMF, on a per capita income basis, India ranked 138th by GDP nominal and 118th by GDP PPP. Since the start of the 21st century, annual average GDP growth has been 6% to 7%, and from 2013 to 2018, India was the world's fastest growing major economy, surpassing China. India is the world's largest manufacturer of generic drugs, and its pharmaceutical sector fulfills over 50% of the global demand for vaccines. Other major industries of India are IT, chemical industry, tourism, food and agricultural production, construction and real estate, textiles, telecommunication, and automobile. India has a retail market worth $1.17 trillion, which contributes over 10% of India's GDP. It also has one of the world's fastest-growing e-commerce markets. Since the 2000s, India has made remarkable progress in reducing absolute poverty. Between 2011 and 2015, more than 90 million people were lifted out of extreme poverty. However, the COVID-19 pandemic led India's economy into a contraction of 7.3%. The economic slowdown triggered by the outbreak is believed to have had a significant impact, especially on poor and vulnerable households. Recent projections of GDP per capita growth, taking into account the impact of the pandemic, suggest that poverty rates in 2020 have likely reverted to estimated levels in 2016. In response to the COVID-19 shock, the government and the Reserve Bank of India took several monetary and fiscal policy measures to support vulnerable firms and households, expand service delivery, and cushion the impact of the crisis on the economy. Thanks in part to these proactive measures, the economy is expected to rebound, with a strong base effect materializing in 2022, and growth is expected to stabilize at around 7% thereafter.